Central for Quest Trust Company. We are so happy to have you with us. Today we have sort of a different sort of class for you, but a very important topic that I know is on the top of everyone's mind. We have a pre-recorded seminar with our CEO, Quincy Long, discussing the new legislation going through the Ways and Means Committee in the House right now. I will be able to take some clarifying questions at the end. I am not an attorney or a CPA, but I'd be happy to answer some questions for you at the end. Before we get to the video, I'd like to share a few slides, just a little bit of information about Quest, who we are, what we do. Which one is it? They look exactly the same. I think it's this one. Okay. We'll find out in a second. All right. I think we're in. Yeah, this is going to be the good one. All right. So thanks so much for joining us. We're so happy you could be here. Go to the next one. There we go. All right. So
I don't want to swap the screens.
Oh, okay. So it looks right on mine, not at the other one. Sorry about that. All right. Good. I'm guessing we're all good since I switched it. Okay.
No, it doesn't look like it switched. Sorry.
Didn't switch. All right. What about now?
Nothing sharing.
Oh my goodness. Sorry about this, guys. What about now?
Looks good.
We're good?
Yeah, it looks good.
Okay. All right. Not an IT person myself. Okay. So who is Quest and what do we do? So we are the largest IRA, self-directed IRA custodian in Texas. We were started by investors for investors. Two brothers, Nathan and Quincy Long, started the company as self-directed IRA investors themselves and built a company on what the most amazing client experience would be, what would be needed for the self-directed IRA investor. So we do have 20,000 active investors across the country. So no matter where you're joining us from now, we'd be able to help you. These numbers have grown. So we're about 2.1 to 2.2 billion dollars of active clients, assets under administration right now. And we are closer to that, probably a little over 400 million now in those undirected cash in our clients' accounts. So opportunities there for lending and borrowing. Our disclaimer, especially in this one, but in all of them, it carries equal weights. This webinar is for educational purposes only. Quest does not provide any tax, legal, investment structure of any type whatsoever. Education only. We don't endorse any product, service, investments. This is only educational. Please, please, please make sure you are contacting your CPAs, your attorneys before entering into any investments. Please do your due diligence on the people and the investments that you are going to interact with. Very, very, very important. Our YouTube channel has several classes on what you need to do for your due diligence. So definitely look into that. So there's the disclaimer there. So what is a self-directed IRA and why do you need one anyway? So honestly, self-directed is just a marketing term, and it means that you are in the driver's seat, you're in control, you direct us of what you want in your account. Here at Quest, we only hold privately held investment, nothing publicly traded like a stock, bond, mutual fund. We have a platform for this open architecture to invest in these alternative or private assets. So some benefits, of course, diversification. So we're not saying that publicly traded assets are bad or wrong or anything. It just offers us something else. So in addition to asset classes like that, now you have the opportunity to invest in these private assets, real estate, private entities, what have you. Tax savings, of course. We do have tax deferred accounts, meaning you don't pay any taxes until you start taking funds out for retirement. We also have accounts like the Roth IRA, which I find so amazing because after having it for 5 years and reaching 59 and a half, those distributions come out completely tax and penalty free. So definitely get in touch with your IRA specialist. Of course, I have to mention that Steve Savaji is on here with me co-hosting. He's also moderating for us. He holds down our Austin office. Had to acknowledge that, of course, he's on here with us helping me today. Social investing, like not everyone can get, a conventional mortgage from a bank or whatnot. So owner financing a house for someone, especially like in your own community, or, lending to a real estate investor that's going to, fix up a neighborhood and help it, grow and improve a community, is really something that you can see happen. And of course, you can invest in what you know best. So if you're a member of investment clubs, real estate clubs, you're a realtor, you know a lot about oil and gas, et cetera. This is a place where you can use that education and help yourself save for retirement. So these are our 7 accounts. I would love to tell you more all about them, but we just don't have time today. So definitely contact your IRA specialist. Steve's going to put our contact information in here so we can help you out with those. These are the main 3 classes that our clients typically choose to invest in. Honestly, I would say there's a short list. Oil and gas is certainly an asset class that you can invest in as well. So again, make sure you're contacting your IRA specialist to help you out with that. So here's the steps. It's actually very easy to open an account and go through the process at Quest. So open an account, our standard processing time, 24 to 48 hours. Fund your account. Our transfers department can help you initiate that transfer, locate your investment. You as the client get to pick what you want. So you go do your research, do your homework, come back, tell us what you want to invest in. Go through our simple online investment process. And then we, as the custodian of the IRA, can go ahead and send the funds on the IRA's behalf to the seller of the asset. And you're done. And we're happy to help you with that process. Our client portal, we keep improving and improving on it. You can do everything, total account management from the client portal. Your renters can pay rent, you can pay for expenses, you can submit new investments, you can submit your fair market value forms that are going to be coming up in January. You probably got some messages already that in your secure message center about getting ready for those. You can see all of your annual statements, your monthly statements, upload documents to it. So definitely check that out. Endless education. I think I hit a slide. I didn't mean to, but of course there is our YouTube channel that you can go to. It has this class is streaming live now, and all of our other webinars are under the video section. We also have plenty of other resources just about self-directed IRAs in general, how to do the investment process, wealth of information there as well. Of course, we have our Tuesday and Thursday class at noon Central, and we have our bi-monthly virtual networking happy hour held on the first and third Wednesday of the month. I host at least one of those a month. It's a really fun event. We get people from all over the country. You can just have a minute in the sun on the camera to say kind of why you're there. I'm looking to sell something, looking to buy something, just looking for experience. It's a really fun event. Okay, so the Citrus Social, we are doing some in-person events. So Houston's events is always going to be on the first Tuesday of the month. So we've already had ours. Steve is in our Austin office, and you would have a chance to meet him this coming Tuesday at 6:30 Central. We do have other vendors there. It is a presentation for education, and it's catered, and we have yummy food there. So yeah. Come network, come get some information. This is online too, so you can do this online. It is limited to 50 people, so we ask that if you know that you can't come, that you leave that space for someone else. Okay. Oh, I just put them in the wrong order. Sorry about that, guys. All right, here are the slides that were supposed to be before that. Sorry about that. So here's our YouTube, our happy hour, our weekly classes, and of course, our self-directed Saturday that you're here for now. And QuestCon Live. We have set the dates for this, December 3rd and 4th. This is going to be our 2-day virtual event. This is more of a deep dive education. It's one of the very few events that does cost money. Our early bird tickets are on sale now for $49. Steve and I can help you get a ticket for free. Opening up a new account right now at Quest can get you a new free ticket. So contact us. We'll get that set up for you. Of course, you can go on our website and register as well. And last but not least, how to get in touch with us. I promise this is the last thing we're about to hear from Quincy, I promise. Okay, so you can scan the QR code. You can chat with us live on our website. A chat box pops up. It is manned 8:30 to 5:30 Central Time. The IRA specialist, Steve, and I are on there. The transactional specialists are on there. We'd be happy to help. I love our phone number, 855-FUN-IRAs. We really do think this stuff is fun and exciting. Or email us directly. There's my email. There's Steve's email. I know he's going to put those in the chat box for you as well. Okay, quite enough from me. I know that you are really ready to hear Quincy's presentation. Where did my screen go? Okay, so enough from me. Mr. Ron Rivas, who is our AV specialist that's helping us out today, is now going to play Quincy's video. And afterwards, I will be taking some clarifying questions. So go ahead and put those in the Q&A box or in the chat box, and Steve and I will do our best. He's short as the man, Steve. And we will do our best to get those questions for you. Most of them will probably hold to the end. So here we go, guys.
And we're live.
Awesome. Hey guys, Derek Long here, Quest Trust Company. Today we're going to be going over a really unique topic, mainly because it's something that's just kind of came almost out of the blue. We're going to talk about some legislative that I can't even talk, some bill changes that have been proposed. And so we wanted to do is bring in one of the smartest people, I think, in this industry, our CEO, chairman of the board, Mr. H. Quincy Long. So before we dive into this topic, we always want to remind people here, guys, that Quest, we are only here for your educational purposes, right? This entire class that we're getting ready to talk about and go over is strictly for you. It's only for education. We can't give any legal advice, can't give you any investment advice, can't give you tax advice. We don't endorse investments here, right? The whole purpose of this is to hopefully answer some questions you may have about up and coming bill changes. So if you are attending this event, make sure you're leveraging the chat box. I will be moderating the whole time. I'm going to do my best to get to every single person's question. Okay. So without any further ado, we don't want to waste a lot of time today, right? We want to dive right into today's topic. So Quincy, thank you so much for joining us. You honestly have probably inspired more people in the self-directed world than anyone else out there. I know there's higher end attorneys like John Heyer and Jeff Watson, even they look up to you in these areas. And when this new bills that kind of have been proposed started to come about, right, I think it freaked out a lot of people. So can you give us just a rundown of what was proposed?
Sure, no problem. First of all, I want to dispel something that some people seem to have the attitude that this is just a bill affecting rich people. And that's just not true. There are some provisions affecting high income, high net amount in their retirement plans, but they're not much. So I'm going to get those out of the way, if you don't mind. So what do they define as a rich person? And I'm being a little bit, tongue in cheek with this, but rich people's problems are people that have $400,000 as an individual of income, $425,000 if they're head of household, or $450,000 as a married couple. Those are these thresholds that the changes started to take place. And if you're in, you have to meet both of these tests, both be over $10 million in all of your combined retirement funds. So that's your 401k, your Roth IRA, your traditional IRA. If you have more than $10 million of money in those accounts, and you have over $450,000 as a married couple, or the other things I mentioned, then you're no longer able to do any kind of Roth contribution. Okay, so no more contributions. If you have over 2.5 million in your defined contribution plan, that's a 401k, for example, then the employer has to give a special report to the IRS about you and your number, Social Security number, and what's anticipated and all of that. That's really not comforting. And finally, on this part of it, you must withdraw from the IRA or from your retirement plans the difference between what you have and $10 million. So if you have $12 million in total retirement assets, then the next year you have a required minimum distribution of $1 million. And so that's the way they keep it down. And also, if you have more than 20 million, you have to to take distributions for anything it takes to get down to $10 million, or sorry, get down to $20 million, 100% of everything down to that point, starting with your Roth IRAs and Roth 401ks, and then going on down to at least 20 million. So that's quite a deal for big people with lots of money. The second thing that I want to say is there's another issue, and that has to do with Roth conversions. And I kind of said that already. Roth conversions you can't do if you meet the income test. Now, for the Roth conversions restriction, you only have to meet the income test. You don't have to meet the $10 million test. So the stuff that requires both $10 million and over $450,000 per married couple are no more contributions to the Roth or traditional. Over $2.5 million you have to report to the IRS, and the withdrawal requirements that we set. So that's the extent of what the rich person's restrictions are under this bill, if it passes.
Now, I know there's so many more restrictions coming up that we're going to be talking about, but let's just take a moment there and talk about that conversion, if that's okay. So I just want to clarify. So if I'm an individual making $400,000 a year, I would no longer even be able to qualify for a Roth conversion. I can't contribute to a traditional IRA and contribute and then just do a conversion real quick.
Oh, that's right. We're going to talk about that too.
Okay.
But I'm just going through the summary. So probably most of the people on this line don't have any of that applied to them. So now I'm going to go for the rest of us, what the rest of us can do. And ironically, the Backdoor Roth is the next topic. Okay. So the Backdoor Roth, I think you have a question on this later, but I'll just answer it now. The Backdoor Roth, the way that works is guys like me who make too much money to directly contribute to a Roth. We have this trick, and it's well known. And the trick is that we put after-tax contributions into our IRA, traditional IRA, and then convert it to a Roth immediately. So it goes in the traditional, it's after-tax contribution, and it goes into the Roth through a Roth conversion immediately. So basically for the last several years, there's been no income limitation for this. Now, after-tax contribution, what does that mean? It means you haven't taken any deduction for the contribution, and you've notified the IRS by attaching Form 8606 to your tax return. So that's all nice and irrelevant if this bill gets passed, because what they've said is no wonder what your income level is.
Oh, somebody.
Actually, that's a good question, Bob. No matter what your income level is, you can't convert after-tax contributions to either a 401k or other qualified plan or an IRA. And that kills the whole idea of doing a backdoor Roth. So by shutting down that provision, regardless of income, you don't get to do that anymore. So that's shut down. Now, I saw a question from Bob, and he had said, what is the 400K or 450K, whatever it is? It's your taxable money. So it goes all the way down to right above where you declare your taxes. So I might make $600,000, but have only $400,000 of taxable money. So that's a good question, Bob. Thank you for that. So that was the one thing. It also this next thing is something that's really rough. Really going to kill a lot of people's retirement. It's really going to hurt the capital markets. I mean, it's just awful. It's effective January 1st, 2022, the IRAs will no longer be able to hold any security that is conditioned upon certain factors. For example, education level or assets and income. So the specific example they gave in the legislation is accredited investors. For you could not hold in your IRA any kind of investment that required you to be an accredited investor. And that's true, by the way, if you had it before or you funded it after. I mean, after January 1st, 2022, you couldn't fund it at all. But if you had it before that, you can, you have only 2 years to take it out. So in other words, if I fund today an accredited investor investment, I've got to have it out of that account or closed out by December 31st, 2023. If I didn't have it, then I'm not going to be able to do another funding of that kind of investment at all. That's pretty harsh.
It is.
And the 2-year transition period is ridiculous. Because typically limited partnerships that I'm involved in run for years. Because they buy an asset and they fix it up or build a building or do whatever. And then it may be years producing income. They don't just go away in 2 years.
Yeah.
Well, if you think about what they're trying to do here, if they force you to take that out in 2 years, then they're basically doing a tax grab. And what's going to be the value of that asset coming out of your IRA? Because there'll be lots of people having the same problem. So people are going to pay a lot of taxes, or they're going to sell their investments at a discount, or, I mean, it's just unimaginably stupid.
I know. Before we keep going too far, can I get to some of the questions people are asking, Q? Is that okay?
Okay.
Yep. The only reason why is just so we can kind of tackle them because they're kind of in a session of what you're stating, but we're going to jump back to a young lady by the name of Anna. Anna just asked, just for clarification, the backdoor Roth, okay, regardless of income level, you won't be able to do a conversion, or is it only if you're making more than that for 450? Let's just
no. If you make under the limit, you can do a Roth conversion, but you can't do a backdoor Roth.
Okay.
But basically the backdoor Roth is killed because you can't convert after-tax contributions. So you can't do what I've done, which is put money in traditional, immediately convert it to a Roth. So if you're under 450, you can still do it, a conversion in general, but you don't need to be able to put that after-tax money into your Roth.
Perfect. Then does this just apply to after-tax IRAs or also before-tax IRA contributions? What I think they're really asking is more like, if I have a Roth 401k, am I still going to be able to contribute to that even if I have a high income limit?
Yes, that's not the test.
Okay.
The test is if you have both high income and high balances, meaning over $10 million in all your collective accounts. You can still, the Roth 401k still exists. It's still fine, but it just counts toward the overall limit.
Awesome. And then I'm just trying to skim through these. I'll answer some of your guys' questions. I promise I'll answer them just in the chat box as we're going through them, just so we can kind of keep going. Does this affect investments in an HSA or ESA, right? Let's say my HSA did a PE investment. That's
a good question. No, it does not affect it. Right now, it only affects IRAs, defined contribution plans like 401ks and Roth IRAs.
Gotcha.
So that's a good question.
All right. I'll let you kind of keep continuing, and I'm going to answer everyone's questions, and I'm just going to kind of type through them, Quincy. So I'm sorry to interrupt.
So then it also doubles the statute of limitations from 3 to 6 years for get this now, valuation related reporting and prohibited transactions. So don't you guys think maybe that we're too tough on you on valuations? It's going to get tougher if this legislation is passed because they know you're going to be distributing it. And here's the other big one. The first big one was the accredited investor type investments. The next one is, believe it or not, they want to prohibit from investing in an entity in which the IRA owner owns 10% or more, either directly or indirectly. That doesn't sound like a big deal. You're thinking they're just adding a restriction in the prohibited transaction rules. No, they're changing section 408 of the Internal Revenue Code, which is not prohibited transaction. It is the rules for creating the IRA in the first place. And so there used to be 6 requirements for it to be a valid IRA. Now there's 7, would be 7. And the 7th one is you can't hold any investment in which you hold either directly or indirectly 10% or more. So don't make any mistakes about this. Don't forget to say it's 10% or more that you can. You have to not be IRAs or related parties to you. It's not more than 10%. So if you did 10%, your IRA is disqualified, because that's the penalty for doing this. Your IRA is disqualified. It's like you did a prohibited transaction, and your IRA is deemed to be no longer an IRA as of January 1st in the year you did that. So that means if the bill passes and you have an accredited investor type investment, it's got to be disposed of before the end of 23, or your IRA is disqualified. If you have, any kind of other entity investment, you're going to have to dispose of that, or it becomes disqualified. And it's just incredible that they would propose something like this. So I don't know. Now, also, I want to point out what's intended by the directly or indirectly. Derek, you probably know that indirect prohibited transactions are something that we pretty much understand, right?
That's correct. It's probably what we deal with more often. Very rarely do we actually deal with a direct prohibited transaction. Those are easy to spot, and
right.
Indirect.
So in the context of this section, indirectly means indirect ownership, and in there, the constructive ownership rules apply, as modified by Section 4975E2. And so what that means is that if you own it, your wife owns it, your parents, your grandparents own it, your kids, their spouses own it, any part, that counts against the 10% limit. So that means that they're cutting off a whole bunch of possible future ones, but don't forget, after the 2-year limitations period, the 2-year curable period, your IRA will not be an IRA if they find you with an entity investment in which you or any of your family members that are disqualified persons owning 10% or more of that asset. So that's pretty serious. And
that's going to, sorry, go ahead.
Go ahead.
I was say, so just so you guys are aware, it's when he's talking about these things, right? If your IRA is doing some sort of thing where you're investing into something where you had to be accredited or sophisticated or have some sort of special knowledge, this is going to hold true for most multifamily deals, senior living complexes, storage units, all of them. Your IRA will no longer be able to hold those investments. You have 2 years to get rid of it. Right. And like Quincy was saying, most of us that have done a syndication type deal, your deal doesn't pay out for 5 years, 7 years, maybe more. So what are we going to do in those cases is you got to come up with a way to get it out of the IRA. B, that 10% that he's really talking about is going to probably, and I'm sure you're going to talk about this here in a second, eliminate a lot of the ways people have tried to do their checkbook control.
Oh, let's talk about that, Derek.
Mm-hmm.
So we talked about it being, the 10% rule, right? Well, separately from that they have said that if the IRA owner is an officer, and they said officer in the summary, but the real rule is officer, director, or persons having similar responsibilities to an officer or director, that's a checkbook control LLC. That's done. It's dead. It's completely impermissible. So that's another little factor.
Yeah.
And that
Years
also,
have you been saying that that's going to die eventually, and people have just ignored you.
well, that's true. I don't want to be right in this case. And the final thing that they did was just do they added the IRA owner as a disqualified person in the prohibited transaction rules. I'm going like, well, anybody that knows me knows that they've always been a disqualified person, at least in the context of self-directed IRAs, but they felt they needed to clarify that. So that's the long answer to the short thing. So we can just take questions from here on out, Derek.
Yeah, so the question line has blown up. I probably have about 40 of them, and that's not an exaggeration. So one of the things that are kind of popping up here is, all right, can my IRA then still invest into a personal property trust or some sort of trust, and the trust go out and do the investment?
No,
if this bill was to pass.
If the IRA and disqualified persons own 10% or more, the answer is no. So then the question becomes, okay, well, if that's no, what do I do in the 2 years? Either got to take it out, close out the investment, or distribute the assets from the trust, put them back in the IRA so they can be held directly. Can you imagine the nightmare of this?
It's going to be insane. Remember, for anyone out there that holds these type of investments, and for Quest, we call it a PE investment or private entity investment. This is probably going to affect each and every one of you, okay, that have done some sort of PE style type deal. Now, a couple of times I got a few questions about the solo 401k or a QRP plan. From the way I've read it, it doesn't affect the 401k yet. But what are your thoughts on these type of bills affecting the solo 401k?
Good question. There's nothing that says that the investment restrictions that I talked about affect 401ks at this time. Of course, I could change that, but there's nothing in this bill. Okay. But they do count towards the $10 million limit. So they are affected in that sense, but not affected by the restriction that we talked about, except for what we just said. I'm sorry.
No worries. Now, I have some questions here about partnering when we talk about notes and physical property. So how is this going to affect my IRA owning a property physically, or does it at all?
Well, it doesn't right now.
As of now. Okay. So right now, that means that our clients could still be doing, assuming this bill passed, right? These bills on an individual level went through, they could still be doing a lot of investments from real estate to notes, correct?
That's right now. That's the situation. That's correct.
Bam. What are the likelihoods of this type of bill passing?
Well, for that, Derek, you need to read the news and see how the plan is going. Because if it gets through, the likelihood is we probably wouldn't have time to delete this. If you think about it, this is a revenue raising bill. So they have to have money coming in. And if I calculate it right, distributing all entity assets where the IRA owner and or his family own 10% or more is going to disqualify about, 30, 40% of the assets at Quest. And all the people that have relied on trust for all those years, sorry, you either got to take it out of the IRA or take the assets and put them directly in the IRA.
So, guys, I'm trying to get to all your questions. I know there's so many of them here, and they're kind of, they just keep popping up. So we're doing our best. Can you give me maybe a solution? Is there something we can do on an individual basis to maybe help not let this bill go through?
Well, I mean, obviously, we're all doing campaigns to our congressmen and senators. It's important to get to the people that are voting on the bill, right? Mm-hmm. And realize you're not going to likely change most senators and most congressmen's deals, but you can, believe me, I used to work in a politician's office as a page, and it was a lot of fun. But, you know, it's contacting the congressman. And Derek, I think we have a letter.
Yep. And I'm going to get you guys a letter and some links for that here in just a minute, guys. I got a good question from a gentleman by the name of Dan. Can you expand a little bit more on the 10% rule? Does this mean my IRA can no longer set up an LLC or a trust, even if I'm not the trustee or manager?
That's correct.
So pretty plain and simple, right? So a lot of us have leveraged these type of, and I'm one of them. I've used my IRA to partner multiple IRAs together to set up a trust, and the trust went out and purchased an asset, being mineral rights for me.
Well, you'll have to distribute that in the next 2 years or close out the investment. Yep. Or convey it directly back to your IRA.
That's correct. So, someone asked, would this apply to inherited IRAs? I'm going to say, yeah, absolutely it would. All these rules still apply to an inherited IRA the same way it would a traditional Roth IRA. Would you agree? Yes,
they would, except for the inheriting an IRA is not considered an addition and a prohibited addition. So if you inherit an IRA, it's not going to mean you get over the $10 million mark from the inherited IRA. So it counts towards that, but it doesn't count as, a prohibited thing to inherit the IRA.
I'm getting a lot of questions on trust and LLC, guys. So long story short, just to shorten it up, understand that the IRAs no longer would be able to set up that trust or LLC, even if you're not the trustee or manager. And if you have one of those assets, all right, that's set up that way, you have 2 years, assuming this bill passes, to change that asset, okay? To either have it distributed, pay it back, something along those lines. Can you get back to the F&B aspect for a minute? A lot of people, for a long time, we've had to require these fair market values and stuff. Assuming these things kind of go through, how is that going to change? How are we going to go through some of these fair market value aspects?
Well, of course, the details are not available yet, but because we've always taken the position at Quest is that, well, we'll take less solid information if we're just trying to value something where there's no distribution, right? It's just like, for example, a person with more than 5 years with a Roth IRA, who cares what it's valued at? Now, the IRS doesn't feel that way, but who cares what it's valued at, because it's going to be tax-free anyway. You follow me?
Mm-hmm.
Now it's not going to be the situation because we know that these entity investments are going to have to be distributed. So we're going to have to be a bit more rigid on the valuation issues to make sure we're reporting the taxes correctly.
Going through single family rentals, solo 401ks. Will I have to dissolve the personal property trust? What is the bill's specific name? Like, I've given out the numbers, right? Because what I kind of been telling people is it's the physical bill numbers range from 138301 all the way down to 138314. But what's the physical bill's name? Is there one?
Yeah, I'm not really sure about that. It's the budget reconciliation bill. That will get you farther where you need to go. It was held to get a copy of the actual bill itself. It's 881 pages. And I think it's just the budget reconciliation bill. But I don't have the front page. I only have the 40 or so pages that apply to IRAs in front of me. But we'll get that information out to you.
Yes, we will. So a couple things is I wanted to maybe start to share and talk about some of those letters and stuff that you mentioned about reaching out to Congress, because obviously, we don't want people to go through these motions, or we don't want this bill to pass, and we don't want people to be freaking out at this point in time.
That's
so
right.
Let's say I'm a brand new client. I call Quest. Do you think it's okay for us still to go through this syndication process, right? Is it okay for them to go ahead and still do an investment?
Well, we can fund them, but you're going to have to distribute them in 2 years if if you don't, well, you just have to distribute them within 2 years, unless, of course, you and other related parties own less than 10%.
Perfect.
So in a lot of the syndications, the people own way less than 10%. So I suppose in that sense, we could do those all day long.
But even with the syndications, I feel like most of them should be applying or having accredited investors or sophisticated or something. So,
right.
A couple of people asking, like, so if I own a note, I lent some money out, right? Will my note be affected even if it's part of multiple IRAs? Ultimately, no, at this point in time. I always like to say at this point in time, because this is usually just seems to be a stepping stone, right? It can always lead to another stepping stone in the future. Is that a safe assumption?
Well, if you want to get really into legal details, which I don't think, that's what we're talking about, a joint venture is considered a partnership under tax law. And so technically, I suppose you could argue that could be seen as a violation, but I can't really see them pursuing that, especially with everything else going on. So it's certainly, you can't form a trust and have everybody invest in the trust and then do the note. That you can't do. If I had to guess, and since I don't give tax legal investment or deal structure advice, it's just a guess, not worth the pixels on your screen. I would say you can probably still joint venture a note by having each person own a percent of the note. However, notes can be securities. So if you're parceling it out and saying, okay, I have 100,000, who wants to put in 10,000? Who wants to put in 20,000? Then that's probably going to be a security, and that's going to be a problem.
So I had a couple questions about contributing to a Roth portion of a 401k. All right. And it seems like it's coming down to one specific section. All right. But let's say, here, I'm an employee of Quest. I contribute to my Roth portion of my 401k. Will that portion alone be affected? Will I be able to still roll that out after I, 10, 20 years into a Roth IRA?
Absolutely.
Okay. So that portion is not being affected at all when it comes to the 401k?
No, not right now.
Okay. Not right now. I always like how you have to add that in there. So a couple things is, I know we do a lot of work with people like Jeff Watson and John Heyer, just because they are some other IRA attorneys. And one of them kind of went through and created a website that kind of goes through the proposal of the law and what to do in those cases, and it has some letters in there. Do you mind if I share my screen and we look at some of those letters?
Oh, go ahead. That's right.
Absolutely. So the first thing, and I'm going to go ahead and post this right here in the chat box for everybody, is I kind of like the name of it. I think it's unique, but it's labeled handsoffmyira.com. Now, what I like about this is it talks about the proposed law, right? And you can go ahead and click on this and it'll describe what it does, but I like what to do. So when we go through what to do in this aspect, you can download a letter, right? That is almost kind of pre-written a little bit. Make sure you make it your own and stuff like that to send off to your senators and your congressmen and women out there. Just stress making your points known, And I think this is something that a lot of people need to take advantage of, right? You can download a copy of the letter right here. You can figure out who is your point of contact, right? That you could stress, make some noise, right? You can stress your point. You can make your voice heard. So I firmly believe that everyone out there, if you're scared and you're nervous and you're worried about this bill, maybe it makes sense for them to kind of maybe check this out and make some noise. Would you agree?
Absolutely. That's the way it worked. And when I worked in the senator's office as a page, it was like, try not to make it too complex. Bullet points are great. Because all they want to know is they're not going to read the individual letter. Probably not. Mostly they're going to read oppose or not. So I was going to write to my congressman, but I'm going to make it a bullet point list. But whatever you do, make it clear in the heading or in the RE or something that you oppose these sections of the bill. So that's the key thing that they're going to be looking for.
And remember, guys, if you don't know who you should be writing, what's nice is this website gives you this link right here. You can click on the link and it will bring you directly through, right? And then you just, hey, find your rep by typing in your zip. You type in your zip, and then it allows you to email the representative that you should be working with, or et cetera. So I do think this is actually a really cool individual site that, some attorneys went through and made just to help people in this aspect so they can really start to understand what this bill is going through.
Well, I have to say at this point, I hate to do this, but I kind of confused myself for a minute there and misspoke earlier when I said that we could still do accredited investor investments as long as it's below 10%. Those are two separate rules. Mm-hmm. No, you cannot do accredited investor type investments at all. And the 10% rule is for everything else, like trusts, LLCs, corporations, whatnot.
The people that focus more on the checkbook control, I always type to say maybe.
And the checkbook control is a separate provision from the 10% provision. Checkbook control is just barred. Mm-hmm. There's no touchy-feely with that.
So got a couple more questions here before we kind of start to close things out, guys, right? And make sure you access this recording, okay? One of them real quick from a young lady by the name of Ashley is, can you please clarify how syndication deals will be affected? And I'm just going to say straight up, you can't do them anymore in the self-directed IRA if this bill passes.
That's right.
Huh? Can't do it. And if you hold one of those syndication deals, you have 2 years to get it out of the IRA.
Well, to close it out or to take a distribution.
Yep. Now, one of the questions that kind of popped up that I thought was unique, and it actually made me smile a little bit. How will this affect Quest? And like, would we have to shut our doors, right? If this bill passed, would Quest no longer be around? What do you think?
Well, I think the answer to that is no, it won't affect us in that way. Some people may lose their jobs because also be doing with less income. I think we have an estimate that as of this moment, it would end up costing us about $3 million a year. So we'd have to do some trimming, but we would pick up on business that other custodians who are going out of business would do, and we'd rebuild in that sense. And I suspect that eventually this will get corrected to some level. But now this is only a proposed bill, but it's part of a revenue raising bill. And what do you think the tax effect is of having all those distributions? They want to collect taxes. So even though this may not pass in its current form, expect some of these things to be in the final bill or in a bill in the future. So just recognize that that's a possibility. And I see a question coming up repeatedly. Can you invest in real estate and notes? The answer is yes.
Yeah. So that's the thing, guys, is remember that from a self-directed side, right, we deal in a lot more things than just syndications investments, right? For the longest time, the majority of our investments came across as notes. In addition, a lot of our clients use their IRA to buy a property directly, whether it's a rental property, right? They're going to try to do some sort of seller finance aspect. Sometimes we've seen a couple of fix and flips here and there, but note that the IRA on a self-directed side can still do a lot of investments, right? It really, really can. And I don't foresee Quest going anywhere in the near future. So I'm always going to be here to help anyone out. And I think, Quincy, you feel the same way, that you've really built a strong company in the aspect of making sure that people are here to educate individuals. We still have a non-automated line. You can call us right now and the phone will ring and someone will pick up the phone. You don't press 1 for this, 2 for that. Someone answers. And we're always going to stick true to that. We're going to do everything we can to make sure we can help every single one of you guys understand what we can go through. So,
I think here's the immediate effects is that, you won't be able to do these. We won't be able to fund these investments after the end of the year. That's the first immediate effect. The real crazy effects are going to be 2 years when people have to have those things out of the IRA if it passes. then that's going to be a real incredible thing, because people can say, well, do I distribute? Do I just convey the assets to my IRA directly? What am I going to do? Do I sell the investment? And that's where the real problem is going to be. It's not going to be January 1, 2022. It'll be much later before the full effect hits.
So, guys, a couple things out there real fast is with these type of bills, when they come about, make sure your voice is heard. Make sure you're making enough noise. All right. If you have questions, give us a call. We have IRA specialists on staff that can help answer some of your questions that may come up to a degree. Understand, we're not attorneys, right? I'm not a CPA. We can't give you tax advice or legal advice, right? So we can I always like to say we can bring you up to the line, but we can't cross it. So that's where a lot of times you got to reach out to some of these other individuals, people like Jeff Watson and John Heyer, just as an example. But I don't want people to freak out too much. What I wanted to do is just remind people that in these situations, okay, what to do, and so 1 minute, let's see.
Make noise is what you need to do.
Absolutely. So what to do is, first off, make some noise, write your congressmen and women and let your voice be heard. Remember that we gave you this link down below, and I saw Ingrid posted it as well, but this will really help in just getting our point across and your point across. Right? We want to see everyone stick with self-directed IRAs. We want to see everyone doing these type of investments because it's where you can make some good money. It's where you understand what your money is doing. We love to see people go out and touch, feel, see, look at their investments because it's what helps them understand. All right. Lastly, I always like to say is make sure you guys don't miss the boat then. We don't want to see anyone missing out on setting up a Roth IRA or something while we still have the ability to do these type of Roth conversions. Right? You need to set up a Roth IRA here. I would argue before the end of the week. It doesn't matter if it's with Quest. It definitely doesn't matter if it's with your local custodian, your Wells Fargo, your Fidelity's, your Charles Schwab. Everyone out there should probably be thinking of setting up a Roth IRA. If you want to set one up at Roth, we're going to waive your application fees. We really are. We're going to give you a Roth Rush sale just to make sure that it's easy for everyone out there so you don't have to think about what's going on, right? Get those accounts set up to make your contributions, right? We don't ever want to see anyone missing the boat in these type of areas. If you would like more information on these, please email your IRA specialist, right? It's just IRA specialist at questtrust.com. You can contact Juan Deshawn directly. He put his email down there. But ultimately, guys, we're here for you. So Quincy, before we kind of close things out, is there anything that you want to just maybe elaborate on and stuff just as a closing aspect?
No, it's pretty much said it all. I mean, it's almost incomprehensible, the disaster that this could be. And we really need to try to stop it. The only good news of the day is that the Democrats are so divided, it seems unlikely that it'll go through, at least in its current form. But we had no notice of this coming until the bill came out of the subcommittee in the House Ways and Means Committee. And it was a big surprise to everyone. We knew the dollar limits on IRAs were coming. And that's because they're trying to go after people like Peter Thiel that started with $2,000 and have a $5 billion with a B, $5 billion Roth IRA because he invested, in startups like Facebook and whatnot. And so, so just realize that. And so we knew that was coming, but when the bill bounced out, we said that basically they're going to shut down half of our business or more. That was a real big surprise. So we've had put a lot of effort into getting the word out, and all of you should do the same. Even if you don't understand everybody, refer them to that website or have them listen to this tape and, get the noise out there. Maybe we can stop it. Hopefully the bill won't pass at all, or if it does pass, it won't be until a future date where we can have more time to work on this, because we've only had like a week since we discovered this. Mm-hmm. And if you're a busy congressman and you've got all the stuff going on right now, you can imagine how busy they are, right? So
Absolutely.
capturing their attention is going to be hard. And the only way we can do it is to make a lot of noise.
So guys, if you hear the theme of this is make some noise. If you have a Facebook, this right now, share it on Facebook. Make this go viral. Let people see it. Let people hear the education. Let them know that Quest is here to help out and answer questions. That's what we're here for, guys. Set up a Roth IRA so you don't miss the boats. You know, that's why we're waiving you the fee. Honestly, that's all we got. It really is. So thank you, Quincy. Your time is very valuable. You really have inspired so many people, not just on this call alone, and I don't know if you're watching, but a lot of people are telling you thank you very much. Very informative. But a lot of people in our industry, including other companies, have always looked up to Quincy Long. So Quincy, thank you. I appreciate you being here. So
Right. Thank you for having me. I'm sorry I'm not more eloquent, but that's the way it goes. At least I have the information.
yeah. So thanks, everybody. Once again, reach out to us. Let us know. We'll set you up accounts. We'll answer your questions and just send me an email. Okay. Thanks, everybody.
Bye.
All right. So obviously that was a pre-recorded webinar that Derek, a fellow IRA specialist, and Quincy Long, our CEO, did together, and they did that for us internally. Of course, it's on our YouTube channel. I've put the link in the website, the chat a bunch of times. I know Steve can put that in again. I did put the directions of how to save the chat box. If you are having trouble with that, no big deal. I put our email, Steve put our emails in there. You can email me. I'm happy to send you the chat box with all the links and all of that information. So of course, and I knew this would happen, and I'm happy to do it. We got a bunch of questions asking for clarification. So of course, I am not an attorney. I am not a CPA. We cannot give advice, but I am happy to give some kind of clarifying information on what exactly did that bill say. I don't really understand. One of the things that we got, I'm kind of going to try to go through the chat and the Q&A box I don't want to miss anybody, but we did get a couple questions on, let's scroll back up to the top here. Sorry, guys. The $10 million thing. Here we go. This is kind of like the beginning. Okay, so the $10 million thing was, I definitely got a couple questions on that, and like, what does that mean? Quincy was also kind enough to kind of put it did a document for us. He also gave me permission, I gave all of us permission to send out this document to anybody that wants it. So again, you can email Steve and I. It's more like a layman's terms and kind of gives like a summary of the bill. It kind of breaks it down. Provisions only affecting high income taxpayers with large balances. Then it goes to provisions, high income taxpayers without regard to balances. And then it goes to all taxpayers without income or balances, what affects you. So it kind of breaks it down that way, and it kind of makes a little more sense. So for the $10 million clarification, so it's 2 tests that you pass for this provision of the bill. So taxpayers fall into this category if they meet 2 tests. And this is kind of what Quincy was talking about in the beginning. You must have a Roth aggregate vested balance in combined total of all retirement accounts, including, so this does not directly affect retirement plans, but it absolutely includes them in the involvement of this. So including the balance of 401ks, 403bs, 457s, and et cetera, qualified retirement plans over 10 million. So that's an aggregate balance, and have adjustable taxable income. It ranges from 400,000 to 450,000. So you have to meet both. So that one is an income and a balance. Now, the other thing about that, so should you meet those requirements, that's A, no more contributions to an IRA at all. Also, the employer that sponsors that plan would then have to report to the IRS any balances, aggregate balances over $2.5 million. The combined, this is where it talks about the distribution of that. Traditional exceed $10 million at the end of the taxable year. The required minimum distribution are increased for the following year to 100% of the amount necessary to bring the qualified retirement plan and eligible deferred compensation plan, your 401k, down to 20 million and 50% of the remaining balance over 10 million indexed for inflation. So these required distributions must be, so you have to satisfy these both rules. As you every year, well, I guess for these 2 years that they're allowing us until it's fixed. So it sounds like, and that one kind of is a more difficult concept because it has this, and it also involves your spouse's balance. So that's how I think some of these 10 million. So it's like, well, who has a $10 million balance? It's a very small population. And you're right, that is a very small population. But some of these, like, well, when you put it with your spouse, you put it with everybody's 401k, IRA, all that balance together, it kind of can add up. So A, this is just a bill. It hasn't passed. The voting has been delayed. We don't know when they're going to be voting on this. As of the information we have right now, should it go into effect, it is expected to go into effect by 12/31 of this year. That could obviously change since voting has been delayed. So this is not a bill. This is not law yet. Of course, we're hoping that this never becomes law. So the question of if I have less than $10 million, nothing's affected. That's not true. There's still things that can work with that. This was asking for links. We did that. I just want to make sure I kind of get to that. Bill has not been passed. There was an additional petition that Steve posted a link in. That's another thing you can go sign to kind of make some noise in all of this. There's another one in there that I'm scrolling to. Okay, so what is the exit time? It's kind of the other thing that I got a bunch of questions on. So the IRS is giving everybody 2 years to kind of unwind this. So to kind of unwind what you have that they're going to be considered prohibited transactions. Prohibited transaction means your IRA ceases to exist at that day, has to be distributed, you got to pay taxes. It's not something that you want to do, but their 2-year timeline is 1/1/22 through 12/31 of 2023. So they are giving you a 2-year time limit to unwind this, to fix it. Of course, consult your attorneys and CPAs of like, what does this mean for me exactly? Call Quest. We can talk to you about your account specifically. In general terms, of course. So they are giving you 2 years to fix it. But after that 2 years, if you haven't fixed it, regardless if you've had to take like a fire sale price or something like that, they don't really care. And it's just going to be a prohibited transaction. So 2 years to unwind this stuff. Okay. So technically, it's not affecting what you can or cannot do in a 401k. So we have this question. If you put taxed, so after tax Roth contribution in a 401k with the intention of moving it to a Roth, how long do you have to leave it before moving it? Any actions you're wanting to take that you think your account is going to be affected by this new bill, 12/31 of this year is when they're saying they want it to pass by. So let's get in touch with our CPAs, our attorneys, your IRA specialists to kind of see what we need to do to unwind this. All right, the Backdoor Roth conversation. We got some questions on that. Okay, So the backdoor Roth is typically defined this way. You put after-tax dollars in your traditional IRA, which is typically what you put pre-tax dollars in, but you put after-tax dollars, money that you've already been taxed, in your traditional IRA. You file a form 8606 with the IRS to let them know that this is what you've done. And then when you convert to the Roth, since you've already paid taxes on this money, it's a tax-free Roth conversion because you're already converting funds that have been taxed into an after-tax account. This is what they're saying. So this is so it pieces of it affect 400 to 450,000 earners, regardless of, or, you know, depending if you're single, head of household, what have you. And some pieces of it affect like everybody. Make a bunch, you know, make over 400,000, have $10 million IRA, have $1 in your IRA affects you. So the high income taxpayer, this is the 400 to 450 joint, may only do a qualified rollover if it's made from a Roth IRA or from a designated Roth account. So you're pretty much just going Roth to Roth. So the backdoor Roth is just going to be a no for everybody. So there's no more of that. Now, the piece that I think that they're not mentioning now, also when you do a rollover, it's kind of on your basis, on your aggregate accounts. So if you have kind of any amount of after-tax dollars in your aggregate accounts, it sounds like you won't be able to do any conversion. But I am reading that, me personally, I'm reading that is if you have only pre-tax dollars in like a traditional IRA, only pre-tax dollars, this is not any after-tax money, you can convert that to a Roth because it's that pre-tax money and that is not mentioned. Now, I do have to get some clarification. I've asked this question about 6 times and I get a basic yes, but it's still a very cloudy answer because it's still kind of cloudy the way they wrote it. But I'm thinking that that's like still going to be a thing. Maybe they'll pass it with provisions, something like that. But that classic backdoor Roth, that after-tax contributions and the pre-tax filing the 8606 and doing it that way, that is a no more. Also, that mega Roth with the 401k plan and blah, blah, that whole thing, done. We're done with that. Regardless of income, regardless of, I have $10 million in my plan, I have $1 in my IRA, I make $30,000, I make $50 million. That's just a no. That's just going to be a no. So, those kind of things that really, that's going to affect people. I don't really understand kind of this whole question, but so disqualification means you owe taxes if you're cashing it out. So yeah, if some of these investments in your account are going to be then later considered prohibited. So one of the things was you can no longer have if you have to be a type of investor to be in that investment, you can't do that anymore. So if you have to be an accredited investor, you have to be a sophisticated investor, you have to have X amount of years of education. Doesn't matter income, doesn't matter account balance. It's just a no. It's just, you can't do that anymore. So they are giving you 2 years to get out of that, but maybe you have to sell that. These are private investments. So, it's not like a public market where you can just, oh yeah, anybody will buy that. So are you going to have to maybe sell some things for less? It's a possibility. Are you going to have to pay taxes on some of that stuff if you can't, have the IRA hold it directly? Yeah. So we're not in love with this. And this absolutely can affect people, that don't make, just kind of like Quincy said, this bill is only for rich people. That's absolutely, not what I said, not what will be in there. So what happens January 1, 2024, and there's shares in the LLC that the IRA holds that are not transferred. That's going to be a prohibited transaction. Prohibited transaction means your IRA ceases to exist like that minute. And the IRS can tax you 100% for that prohibited transaction and anyone else that's in that prohibited transaction with you. So if it does pass, it's going to be really important that we take care of these things, in that 2 years. And there are ways to unwind this stuff. There is a way for if you have an LLC in your IRA that owns a rental house or a promissory note or whatever. There are assets, a lot of assets, most assets that the IRA can hold title to. So that's a possibility. So there are solutions for these things. It's not all doom and gloom, but certainly to be aware of, educated about, what have you. I know we're kind of getting into time, but I do want to make sure that education is shared on this. Also we do have a lot of investors at Quest that do multifamily syndications. That's going to be a no, regardless of income, regardless of account balance, whatever. And I have gotten a lot of questions too. Why would I do? So this presentation was also done while we were running a promotion for Roth IRAs. And the thought behind that, and so they were giving Juan's information, Derek's information. Derek and Juan are not here today. I apologize. You got me and Steve, but we're all on the same team. So why was it that we were saying you should get a Roth? Because the whole thing of Roth conversions is being threatened. So the idea was, let's do it while you can. Because the thing about the Roth IRAs that we find that is so special is after holding it for 5 years and reaching age 59 and a half, all of those distributions come out completely tax and penalty free. Whereas a traditional IRA or a pre-tax or tax deferred account, when you read, yes, all the returns go back in tax deferred, your contributions go in tax deferred, meaning at 59 and a half, the magic age for retirement at the IRS, when you start taking those distributions, they are taxed at your regular income tax bracket. So, a huge benefit to having the Roth is you get tax and penalty free distributions or retirement. I mean, that's pretty cool. Okay, mortgage note or mineral rights. So the things that won't change are buying real estate directly, having IRA hold title, doing promissory notes where the IRA holds title. That is cool. Mineral rights. My husband is in oil and gas, and I was in the oil and gas business for a little bit. And we do have oil and gas investors. So mineral rights are kind of like a special animal. Typically, these have to be bought with a company. You either have to invest in a fund or invest in a company that's kind of holding the mineral rights for you. It's kind of hard to hold the mineral rights directly inside the IRA just because of kind of the design of how those investments are structured. So if you're investing in a fund of mineral rights, investing in a company of mineral rights, that's going to be a no. It's going to be a no. So mineral rights is something that we're going to have to, or, contact lawyers, CPAs of is there a way the IRA can hold title to this? Mortgage notes, yeah, it's just a note as long as the IRA is holding the title. Real estate funds, again, it's a fund. So in investing in companies, it looks like it's going to be a no. Private entity investment with a 401k transfer request IRA. So again, they haven't exactly said you can or you can't do this in your 401k yet. So they're not saying you can or you cannot transfer things in and out of your 401k yet. So let's see, we just have a few more questions to do. Of course, you can drop off if this isn't feeling your vibe. Taxes on the value of the loan. Which will not be easy to sell. That's a huge issue for a lot of people. Syndication. syndications are a huge thing. A lot of those things, it's like a 3 to 5 year commitment. Well, they're only giving you 2 years to unwind it. So are you going to have to take a hit on that? Most likely. See, how will notes be affected? So you can do a note and have the IRA hold title to the note. If the note or like the note fund or something like that requires you to be an accredited investor, what have you, no. If you have to be a type of investor, that's going to be a no. So LLC except sophisticated, going to be prohibited in the self-directed IRA. So I got through, I think, all the questions. I didn't type, hit answered live or what have you. But I think I got to everybody. Thanks for everybody that kind of stayed with me. I appreciate it. Thank you, Steve and Juan, Rivas that hung out with me. We are not going to email the recording, but you can reach it on our YouTube channel. Can you tell us what type of investments will have to be unwound? We kind of went through that through the presentation, Susan. So basically it's going to be syndications, private companies, checkbook control, things that you have to be a certain type for, syndicated, accredited, sophisticated, things like that. So here is the link. I'm going to put it in here one more time. Oh, this is the link of the recording before. Sorry. Steve, if you have the link to, Steve, you have it right here. Sorry. Okay, here is our YouTube channel. And if you go into the videos section, you'll be able to find this video in about 5 or 10 minutes. You can also, Steve is so awesome. And I know it's right here. Here we go. Here are our email addresses. We are happy. I also saved the chat box. I'm going to save it one more time to make sure I have everything. I saved the chat box. So all the kind of links to handsoffmyira.com, contacting congressmen and legislators. I have all that saved for you. All the links that Steve posted with the petition. I have everything saved for you. So we are happy to help. We are here for you. Quest is closely monitoring the situation. We will be releasing more interviews, more webinars as this, goes further and develops. That's what we're here for. We're here to help you for the education. So thanks again to everybody that stayed on with me. I know I went way over the 1 o'clock hour, but I appreciate everybody that hung in there. I do think this is really important information. So with that, I'm just going to say thanks so much. We really appreciate you coming to our future events. Thanks so much, Steve, for sticking in there with me, and Ron. And Steve also just put in a link for all of our future events that are coming up, more webinars, more education, more information coming out about the bill, and of course, all things self-directed. So thanks again for everybody joining in. Have a wonderful weekend, a lovely holiday weekend, and happy Saturday to you. Good afternoon, everybody, and we'll see you next time. Thanks so much, everybody. Bye.